0.1%. And let's get some more analysis now with Kian Soon, Chief Executive Officer and Fund Manager at Astral Asset Management. Thank you for coming in, Kian Soon.
Good morning.
So what sort of December are you expecting for the Greater China markets? I mean, we are seeing trade still being that pressure point. And then, things change from day to day depending on what Mr. Trump thinks. So what kind of month are you expecting to wrap up 2019?
So December has always been a difficult month because by the second or third week of December, most of the institutional investors will have been packing up to go on for their long holidays. So usually the trade volumes are much lower than usual. And with these trade discussions ongoing, as we saw yesterday, when a tweet overnight came from New York from President Trump, I think the markets reacted pretty strongly because there was the fear that the trade discussions might not be going well, and there's no trade deal for December as everybody has sort of anticipated. So for the markets for December, everybody sort of have already been pricing in that a trade deal phase one agreement would be coming in, right? Some sort, somehow, somewhat. But if this deal is not going to come true, I think the markets are going to react pretty violently, and there will be more volatility as there will be lesser players in the markets. The institutional players are not around. Volume is unusually low, usually in December.
Well, we better cancel their leave then. That's, I mean, if there's a possibility that it might not get through. I mean, if you close your books for the year, isn't that going to put those asset managers at great risk?
Shouldn't they be taking their money off the table at this point then,
Some of the asset managers already did. As we saw in last December, right, there was this flash crash in the last week of Christmas, right, if everybody recalls, and that sets a low base for the year 2019. And I was definitely looking at a portfolio, and we were having a good time picking up, good discounts, right, because trading volume is a bit low, but, you could really select the stocks that you like at a good price that you like to buy. So for the hardworking fund managers, December is a good month for shopping.
Okay. What's present for 2020 then?
I think the outlook for 2020 has been pretty mixed. Most of the fund managers are anticipating that somehow there will be a trade agreement between the two nations. However, I'm pretty cautious about this. If you look at what happens in the last 18 months, a trade discussion has been ongoing. We see the rhetorics between the two nations, but somehow there's no agreement. So our fundamental assumption is, for an investment strategy to work, you should not just count on a trade agreement. Rather, whatever that you are working on should fundamentally based on factors that is outside.
Okay, you say December is possibly a time to go shopping. Which geographical markets are you looking at, and what sort of asset classes then?
If you look at the whole global markets, the US markets have rallied pretty significantly for 2019. If you look at the three indices, even with the increased volatility, there's all sort of above 20%. If you look at the emerging markets like parts of Asia, they are actually much priced in lower, and you have actually good selection of stocks that are priced at very reasonable valuations. If you look in Hang Seng stock market index, you look at Hang Seng markets, they are priced extremely low because of what we know, the extreme protest situations. And if you look for value, Asia is the markets that you should shop.
How do you put a value on Hong Kong, though, when you don't know? Nobody knows, not even Carrie Lam's administration knows exactly when these protests are going to stop. And I mean, as the months go by, the toll on the economy it just gets greater and greater and greater.
So in terms of stock selections for companies that are listed in Hong Kong, we go for companies that have no revenue in Hong Kong. There are many companies listed in Hong Kong that have zero revenue exposure. But given the overall market sentiments, their valuations has been affected as well. But if you look at their earnings coming in, quarter on quarter, their earnings remain the same because they have zero exposure to Hong Kong markets. If you look at some sectors in Hong Kong markets like hospitality, F&B, etc., of course they are affected. But there are many companies listed there that somehow has no relationship.
Kian Soon, what are your thoughts on the recent chatter about this global economy bottoming out? I mean, can we invest on that sentiment?
This chatter has been ongoing for the last 2 to 3 years. And the rationale behind this bottoming out is it has happened for a good 8 years, and another 2 years will be 10 years, and by 2021 will be the longest period where the economy boom period, and somehow this doom and gloom happens for certain markets, which I believe is going to be true. But for the markets where the central government still has ample ammunition for lowering the interest rates, controlling the monetary policies, I think it's unlikely to happen at least for 2020.
Okay. Is that EM Asia that you're looking at then? I mean, we are seeing that volatility affects EM Asia. It hits it the hardest. And then we also saw this past week that currency devaluation talk coming from President Trump. Is that a key risk that we should be pricing in for EM Asia?
EM Asia always has debt being the first target region where all the investors will exit. When it comes to any kind of bad news or any kind of uncertainties. The reason is the currencies are not stable, and everybody will prefer to fight for safeties, opt for the US dollars, etc. So EM Asia has their fundamental problems. Secondly, EM Asia is also a market where when times are good, the hot funds, the hot money will come flowing in. And then they are usually the first one to exit when times are uncertain or when it comes to December.
Well, the thing is, next year is going to be a presidential election in the United States, and what we tend to see is that equities or risk assets will remain rather buoyant during times like that. I mean, notwithstanding, of course, the effect on the United States, we always tend to trail along with what we see in stateside. Will that happen here for us in the Asia-Pacific region?
I think for next year's presidential election is actually more interesting because of the impeachment proceedings as well as whether a trade deal is actually achieved with China. So with all these two factors coming into play, people are just going to focus on the headlines of between good news and bad news and focus more on the bad news, which creates massive volatility.
How about positive news for 2020? What can we look forward to?
Let's circle off the conversation with something positive.
For the positive outlook for 2020, I think Asia is still a growing region. Whether we like it or not, our income is going to increase as gradually as a region, and people will be spending more money as our income increases. There will be better improvements in our life. People will be looking for a better education, better childhood. For their kids. So definitely I will see that will continue to expand as we have stability and prosperity in the Asia region.
So you're saying to tap into that consumption trend that's burgeoning here in Asia, and which would be the main countries, I suppose China, right, as you move up the value chain there?
That's right. I'll focus more on China domestic consumptions. Because if you're counting on China to come to other nations to spend, it might be difficult because apart from Hong Kong, the Chinese spendings overseas are actually being reduced, and that has something to do with the way they control the forex. So if you're looking at domestic consumption for China, definitely they do not have a currency element, and I believe even if the economic slowdown, the parents will still continue to send the children to good schools. They'll continue to buy the best milk powder or child's peripherals for the kids.
Hey, that's something that's not unique to China, rest of Asia as well, rest of the world as well. Thank you very much for that. Kian Soon, Chief Executive Officer and Fund Manager at Astral Asset Management.